This is proof that you cannot write off your business clothes as a business expense. Before I get into this, I want to sort of give you a frame of reference. There are a couple different things to look at when we're talking about laws. Number one is the statute. The statute is going to outline sort of generally what the rule is. When it comes to business expenses, we have 162A. It says business expense must be ordinary and necessary. That's pretty broad. What happens after that is people like us, like tax attorneys, people like you, business owners, law firm owners, you start to try to argue that your situation meets the rules. The IRS says no. Then the courts get involved, and we have court decisions that come down that frame the rules according to a certain set of facts and also set guidelines for how to analyze certain things moving forward. That's what we're going to talk about today, is a court case that outlines whether or not or how you can write off business clothing as a business expense. The case that I'm talking about is called Pevsner v. Commissioner. They're all versus commissioners, basically. This is a 1975 case, so it's been around for a long time. As soon as this ordinary and necessary language came out, everybody started trying to write off everything they could for their business. And, the courts, the IRS started saying no, no, no. And these type of things started happening. What do we have here? What are the facts of the case? We have Sandra Pevsner. She was a manager at an Yves Saint Laurent store in Dallas, Texas. So they actually existed back then. Who would have thunk it? As the manager of the store, she was required to wear YSL clothing while she was working. They wanted her to be able to tell customers that she was wearing product if they commented on the way that she looked. She also wore the clothes to and from work. She wore them at fashion shows sponsored by the store, and she wore them at business lunches related to the store. But otherwise, she did not wear the YSL clothes. Kind of weren't her style. They were a little too expensive. They were a little too flashy. So she didn't actually wear them in her real life, but she was required to buy them for business. So when she did her income taxes at the end of the year, she wrote them off. These are the things that she wrote off: 4 blouses, 3 skirts, 1 pair of slacks, 1 trench coat, 2 sweaters, 1 jacket, 1 tunic, 5 scarves, 6 belts, 2 pair of shoes, and 4 necklaces. The total for all of that, by the way, in 1975 was $1,381.91. Heck of a deal at that time. She also wrote off $240 for maintenance, which I'm assuming is dry cleaning of some of those articles. That was that. The IRS saw these deductions and said, nope, not today, my friend. It was then appealed up. She actually won the first case in the lower court. It was appealed up by the IRS, and now we are here at this court making this choice, and we'll see what they did, actually. Here's the argument, though. The taxpayer is a simple person, would never buy those clothes outside of work. Cited section 162A of the code, like I said before, allows for deductions of ordinary and necessary business expenses. The court framed the issue this way: does this rule for ordinary and business expenses apply, or does section 262 apply, which says no deduction for all personal, living, or family expenses? So we have ordinary and necessary business is a yes, personal, living, or family expenses is a no, no. The court came back and said, we're going to analyze this using a 3-part test. Part 1, is the clothing specifically required as a condition of employment? Number 2, is the clothing adaptable to general usage as ordinary clothing? And number 3, is it not so worn? Okay, we'll get to the third part. Don't worry about the language. It's kind of wonky. That's what we do as lawyers, make things hard to understand. And the way it works is if you fail any of the 3, you fail the test. So you have to have all 3 present to pass the test. Pevsner, the person who was the taxpayer in this case, argued that part 2, which is kind of the part at issue, should be viewed subjectively. Okay, would the individual person in every circumstance have worn these clothes as general usage in ordinary clothing? Like I said, in the first court, she actually won. The original court cited a prior case, and this is how the courts work. When they are going to make a decision, they try to look for previous decisions, for previous guidance, and use that guidance to help them make their decision. Well, there is an old case that's kind of, by the way, on the fringe of acceptability that said when you look at this issue, you look at the individual. Okay, you have to account for her individual style to answer the second part of the test. So, IRS appealed. What do you think happened? She lost. Okay, might expect it. This is why the rule is you cannot deduct your business clothes as a business expense. As the owner of the company, make yourself as an employee of the company under your S Corp, for example. Oh, by the way, if you own an S Corp and you are wondering if you are paying yourself reasonable compensation under the rules and you want some certainty for that, I am happy to give it to you, okay? If you go to bigbirdaccountng.com/salary, there'll be a place for you to enter your name and email address. I will ask you for a couple of pieces of information, and I will give you some certainty with whether or not you are paying yourself reasonable compensation. My guess is you're paying yourself too much, which means you are paying too much in taxes. But I digress. This is what the court said. The court said, first of all, the case that was relied on by the other court, they did it improperly. There are a bunch of other court decisions that side with the IRS that the court should have relied on, and they didn't. Those decisions, the ones that the court should have relied upon, said that the second part of the test is not a subjective test where you look at what does the individual feel. It is an objective test, is what generally would someone do. And they said it makes sense because it's almost impossible to determine every individual's personal style and taste. Could you imagine the IRS having to try to figure out if, black hoodies are your thing or not? No, it'd be really tricky. And by the way, the court pointed this out in the decision, and it makes a lot of sense. If you use a subjective test, you could potentially have two different YSL managers. One gets taxed because it is something that they would wear out and about, and one does not get taxed because it is not something that they would wear. This is not the kind of result that they want, so Pevsner loses. Now, what does this mean generally? It is really, really hard to write off regular clothes, even if you use them for business, even if you record a video in them, even if you need them for court. If you could wear them as general usage or ordinary clothing, you're not going to be able to write them off. However, I'm going to make another video here pretty soon about how you can write off some normal clothes in some creative ways. It's going to be interesting. So that's it. All right. And remember, if you're a law firm owner and your firm is taxed as an S Corp, I got a free reasonable salary analysis available for you. Just go to bigbirdaccountng.com/salary to learn more. See ya.